hello and welcome. You're watching First Tick here on News 9. I'm Suyash Maheshwari and over the next half an hour, we'll break down the morning action on the D Street. Now, Indian markets kick-started the week, the second last week of the year, on a muted note with the first tick for Nifty coming in at 21,435 mark. Now, in the opening trade, the market has tested 21,350 levels on the downside, but has since pared most of the losses. And as of 9:30 a.m., as you can see on your screen, Nifty 50 is hovering around the 21,416 mark, down by about 0.17%. Now, Sensex is down 0.25% on the other hand at 71,310 mark. The broader markets are mixed this morning. Nifty Midcap 100 is flattish as of 9:30 a.m. It was trading just below the 45,600 mark, up 0.03%, whereas the small cap index was up almost 0.5% at 14,950 mark. Now, India VIX, the volatility index, has seen a sharp spike of almost 6% this morning, and as of 9:30 a.m. again India VIX was up 13.91%, slowly inching towards that 14 mark. Now, some consolidation at this point may be welcomed by the investors given the tremendous rally that we have seen so far in December. Now, if we jog back our memories, the bulk of this the up move of December has come in the last 2 weeks. The rally kick-started with BJP's thumping victory in 3 states and a better than expected GDP growth number for the second quarter. Now, we saw some bit of a consolidation after the initial, rally for the next few days. But then in the last 2 sessions of last week, that is last Thursday and Friday, we saw big rally of over 1% on both days after the US Federal Reserve in its December policy decisions kept the federal fund rate steady and signaled that multiple rates could come next year. Now, consequently, Nifty in the last 2 weeks has rallied by over 6%, even outperforming both the mid-cap and the small-cap indices, which have rallied by about 4 to 5%. Nifty Bank, which was a laggard for the majority of the year, has outperformed in this rally and outperformed all 3 indices, and it has rallied by about almost 7.5%. But with that, let's also bring on board Mr. Brijesh Ail of IDBI Capital Markets. Hi Brijesh, welcome to the show. Now, now after a tremendous rally, I mean, in the last 2 sessions, we have seen, some at least technical indicators hinting that we are now in an overbought zone. The RSI is near the 85 mark. The PCR, Nifty PCR is above 1.45 sort of levels. Does that warrant caution at current levels?
Morning. So definitely cautious in what sense, like this caution may be from the trading point of view, but when we talk from the directional point of view, I think we are still there are a little bit of more upside is still there in the during the month. So basically what happens, like we are at the mid of the month, and this is the for the expiry for the F&O expiry. If the first 15 days are good, then there are rare chances that next 15 days might be that bad. So maybe from a day, 1 or 2 day point of view, there can be some pressure. As you said, the PCR is almost going to 1.5, 1.6. So that may act as a resistance for the day. But then maybe gradually there can be more of a sideways, more than a correction. So I think, and for the Nifty specifically, I believe 21,600, 21,700. This is the what level I'm looking at. From those points, maybe from Tuesday, Wednesday, there can be a probability slight corrections might be seen. That's a profit booking basically. We will not term that as a correction. So some profit booking which can get Nifty back to some close to 21,000. So technically for the current week, as long as we don't break 21,000, the trend and the momentum and the trend both will stay positive. I would be happy if we see 21,600 first and then slight profit booking. So this would be much of this trend would be perfectly blended. And this entire, if this scenario works out, then the expiry will also be good. So 21,000 remains the immediate base for the Nifty. The same levels for the Bank Nifty goes at 46,000. So as long as 46,000 the Bank Nifty is held, I think the trend and the momentum will be positive. And slow and steady, we should be heading higher.
All right. Now, Brijesh, I want to talk about the Bank Nifty Index more. Tremendous rally we have seen in the last couple of weeks, whereas the index has outperformed all three indices, the large cap, small cap, and the mid cap, rallying by almost 7.5% in that time frame. Now, as we know, Nifty Bank was a major laggard, and now only it is starting to participate. And now we have cleared the 48,000 hurdle. Although we have seen some profit booking this morning, the index is down by about 0.5%. But from what I am understanding, the next big hurdle for the index is going to be 50,000. Are there any, short-term hurdles in between that 48 to 50,000 mark?
I say no, because that is what the Fibonacci retracement level which we are talking of, that is somewhere close to 50,200 odd figure. So we are rounding up to 50,000 level. So I think, and slightly for the day or maybe from 1 or 2 days, there is slightly at 48,000, there's a slight call writing is going on. So I sense once this 48,000 level is taken out, then a one-way move towards maybe a 1,500 points one-way move can be seen in the Bank Nifty. There is no major hurdle in between. So 48,000 is the immediate hurdle which right now we need to keep a watch on. Once 48 is taken out, then another 1,500 points one way move should be, which somewhere close to 50,000. I think that move should come.
All right, now shifting focus to specific stocks, Brijesh. The one stock I want to pick your brains on is SBI. Now, SBI has rallied by almost 15% in the last 1 month or so. It's flattish this morning, but at a record high level. The stock was underperforming for the majority of the year, was not participating in that big PSU bank rally that we were seeing. Finally, a breakout there.
So SBI, the very good chart pattern. If we look at the weekly time frame, it's a cup and handle kind of a formation in the weekly chart. This is extremely bullish. I think SBI is going to see somewhere to the 750 plus level. This is what my directional view for the SBI is. So anytime 600 is going to act as a very strong base. Maybe, for example, if there is some profit booking in the market and there's opportunity for the SBI, whenever it comes by 20-25 point, I think investors should start taking this as a buying opportunity. As I was very strongly believe this 750 plus levels can be seen in the SBI.
All right. Another stock, Brijesh, I wanted to pick your brain on was Zensar Technologies. Now, on Friday, we saw a big breakout on the charts and, the stock rallied by almost 11%. It is extending that rally today. It's up almost 6% this morning and at a record of about 630 mark or so. Now, what's your view on Zensar? The stock has given returns of about 20% in a matter of 5 days. And now we are only seeing the rally in IT stocks pick up. Is that a stock that, one can perhaps look to enter?
Not very sure of Zensar making a fresh entry. But then somebody having a position can definitely hold 650, 660 is the momentum trade for the, maybe on extreme scenario, 680 can be the bet for the Zensar Tech. If somebody is having a position, please hold the position, but then entry would not be make any risk reward ratio favorable because the breakout came from the levels of 550. And only if it comes back to 590, 580, then I think with the stop loss of 550, one can take that view. But right now, fresh entry cannot be made, but definitely somebody is having a position should hold on because I think 660, 680 can be on charts. So that would be the immediate view for the Zensar.
All right, Brijesh. And keeping it with the IT pack, the last week we saw a tremendous rally in the entire Nifty IT pack where all 10 constituent stocks rallied and the pack on the whole rallied by almost 7.5% or so. Big moves for the likes of your heavyweights like TCS, Infosys, HCL, Tech. Now, in that space, among the, the large cap IT names, what do you prefer at this current point?
In the large cap, as you said, HCL Tech is one which has given a very strong breakout. So definitely HCL Tech would be one. If we see in the IT, Wipro is one stock which has not started moving. And for the now, I think Wipro would be the one. I don't say that it will be the outperformer, but then this has been the laggard in the IT space. I think that will also start picking up. So risk reward ratio is favorable in Wipro. So we'll keep a watch on Wipro, HCL Tech. Coforge is something which is extremely positive on charts. And lastly, the TCS. So I think this would be the the way we would be looking at HCL Tech, then the Wipro, and then the TCS.
All right, and also want to get your view on another, on the broader markets in general. The large caps were underperforming the broader markets up till December, but December we have seen a quick turnaround where the large caps are now outperforming the broader markets, whereas we are seeing some mutedness set in the mid cap and the small cap space. So going forward, what should traders do? Should they take exposure or keep the exposure towards the large caps or towards the broader markets now?
I think let's hold our horses to the large cap, because the auto, then the private banks, and then the IT. I think these are the three sectors which are going to lead the market. So even the auto, or if you see, the auto was the one sector which started the rally, and now little bit of sideways momentum. Again, I believe once this festival season, close to the December, and the once the December data comes for the auto numbers, I think even the auto stocks will start performing in the next in the start of the Jan month. So I believe auto will be definitely one space which we need to keep a watch, followed by private banks, the Bank Nifty, which has not yet started to move. So if Bank Nifty continues to start, then I think the private banks and then the IT space. So these are the three sectors from the. We'll be betting more on the blue chip counters as well as the large cap space.
All right. Now, Brijesh, quickly, if we can, take your 3 to 4 short-term trading ideas for the current market.
Sure, definitely. So as we all know, there was a momentum in the railway stocks. So one of my positional bet is on a Titagar wagon at the current price, the 1065. The stop loss with 1014 for the target of 1177. It's a positional bet, maybe 2-3 weeks time frame. And as you spoke of SBI, SBI is again a good amount of trading. Maybe for this week, SBI can be a good trading bet at the level of 648 with a stop loss of 629 for the target of 689. And same like SBI, I think after the very long time, this IDFC First Bank has started moving. So 90 was the level, but there was a lot of call writing was there. So that call writing is now getting unwinded. So I think I see a jump of 5-6 odd points in the IDFC First Bank. So maybe during the week, I think we will see some that move. So this can be again a trading bet. This can be FNO bet where people can play for that 5-6 point of move, because the lot size is quite a big. So IDFC first at the price of 90 with the stop loss of 87 for the target of 97. And lastly, one more stock. It's again a trading bet, Tata.com. So that has also given a range breakout at the current price. Is the stock? I think we can see some good amount of upside. Stop loss will be 1780 with a target of 1885.
All right, that's Mr. Brijesh Iyer for you, sir. Thank you for joining us this morning. Always a pleasure speaking to you. But stay with us, as we'll be right back after a short commercial break.
With all this gear, you must be wondering if I'm climbing a mountain. Well, let me give you a wider look of this place. This is Asia's largest mountain of shame.
A mountain of waste, almost the height of the Qutub Minar.
When you enter capital cities of some of the biggest countries in the world, you don't have 3 garbage mountains waiting to welcome you, depending on whichever side of the city you enter from.
The thing is that a lot of times we talk about landfills only when there's a fire at the landfill. You need to understand that a landfill is at fire almost throughout the year. It's only when the firefighters are not able to douse the fire is when it actually catches the nation's attention, the city's attention, or media attention.
The towering landfills worsen one of Delhi's biggest problems: pollution.
यहाँ पर आप रात को आओ, दिन में आओ, आप 1 घंटे बैठ नहीं सकते बाहर। इतनी धूल, प्रदूषण, महक, आप खाना भी नहीं खा सकते बाहर बैठ के।
Life around the landfill is a curse.
हमारे घर में जो बड़े हैं उन्हें अस्थमा के वो पेशेंट है, आए दिन उनको नेबुलाइजर लगाना पड़ता है।
डॉक्टर ने भी मुझे ये चीज बोला कि यहाँ का एरिया छोड़ के कहीं और चाहिए।
Delhi's garbage mountains are now a fetid symbol of the national capital's trash problem. The question is, who is to be blamed? Watch Delhi's Garbage Mountains. Streaming on News 9 Plus for the Genflix.
They picked my husband. He was tortured there for 2 years. He was enforced disappeared. We had no idea where he is. Within 15 minutes, we got the information that the whole area is surrounded by Pakistan Army. I came out from that in disguise, and after 5-6 hours, I was in Kandahar. I don't have any message for Pakistan. There is no politician in Pakistan. They are puppets of Pakistan Army.
Streaming now. This and more streaming on world's first news OTT, News 9 Plus. Download now.
Welcome back. You're watching First Tick here on News 9. Now, Indian markets have paired some of the early morning losses. Now, remember, markets opened in the red after a tremendous rally that we saw in the last couple of weeks, at least in the last couple of sessions as well, where the markets rallied by over 1% on both Thursday and on Friday. Now, as of 10 a.m. this morning, markets have recovered a bit, but it's still in the red, with Nifty trading 0.12% down, sitting above the 21,420 mark. Now, the index is seen facing some sort of resistance around the 21,450 mark, so that perhaps becomes a key level to track for the intraday. Now, Sensex on the other hand is sitting with losses of about 136 points, and it's down 0.17% as of 10 a.m. this morning, sitting above the 71,300 mark. The mid-cap index, which was flattish, opened flattish this morning, is up in fact by 0.15%. above the 45,650 mark, and the small cap index has paired some of those early morning gains. It was up about 0.5% also in the morning session. Currently, as of 10 a.m. this morning, it's up by about 0.37%, sitting at 14,951 mark. India VIX, the volatility index, is still significantly higher, almost 5.5% higher at 13.84 sort of levels. But with that, let's also bring on board Mr. Gaurang Shah, Senior Vice President at Geojit Financial Services. Sir, a very good morning to you, and thank you for joining us here on First Take.
Good morning.
Now, sir, in the last, since making a low in October, the markets have rallied, and how, Nifty is on a 7-week winning run. Anything particular that stands out to you about this rally?
Thank you, Suyash, and morning to all of you also. I think couple of things that have happened in the recent past that we all are aware, of course. First one was the outcome of the state election. Post that, last week we had the decision from the Fed, and the Fed chief, Mr. Powell, has possibly put to rest all speculation or fears in terms of interest rate hike in the US and possibility of a rate cut somewhere in mid of 2024 is what the street is expecting. Two other points that I would like to mention is, first one is, of course, rupee gaining strength against the dollar. As we speak, it is somewhere close to about 82.95 rupees to a dollar. And a huge downtick as far as the crude oil prices are concerned. $72 per barrel is where NYMEX is trading this morning, and somewhere close to about $76 is where Brent is trading. So these are the other two positives that adds to the sentiments. And of course, along with that, I think possibly in the next 1 month, second week of Jan 2024, we will have the curtain raiser for the third quarter financial earnings for this financial year. Anticipation is that we could do far better than what we've seen in the first and the second quarter. So yes, we have rallied, and I think more importantly, Suyash, there was a lot of talk about on the street about FI flows, whether they'll come back to India or not. And the FOMO fear has led to a huge inflow of FI flows into our markets. So that has also supported domestic guys have been buying for a pretty long period of time. Yes, we have recovered to a great extent. Maybe we might find some headwinds at around these levels in form of intraday profit booking or maybe 1 or 2 days of profit booking. But my understanding, Suyash, is that all dips will be bought into. So if you have not participated in this rally, if you've missed the bus, use all opportunities on the downside to identify strong fundamental companies and invest over there.
All right. Sir, I also wanted to get a pulse of, how the clients, how your clients are feeling. What's their, behavior like currently? Are you seeing an increase in redemptions or, are they building a portfolio for the next 5 to 10 years?
So redemption is a question of two things. One is whether you are in need of money, Suyash. And the second part, which is most important, is, you get the anticipated return. You take money off the table and, you have to be good at both sides. One is identifying opportunities in terms of investment themes. And the second one is taking off some money off the table as and when you get those kind of returns. So at our end, what we are witnessing is there is no hurry to do any kind of redemption or pull back some money. In fact, clients have been, committing more capital in terms of their investment portfolio as far as equities are concerned. Now, be it direct equity or via mutual fund SIPs. And even over there, the numbers that we've seen recently from the AMFI, it speaks quite strong in terms of new investors coming to the market and old investors not only continuing their flows into equity market, but also increasing their allocation of capital towards equity market. So as and when, and it's only a time factor, as and when there is need of money, there will be a little bit of liquidation, redemption, as you call it. But otherwise, I have not seen any such big concerns as far as outflows are concerned. And mind you, this week, Suyash, there are 12 IPOs I am given to understand that are going to hit the market.
Right.
And despite of that, we've seen secondary market perform quite well.
Now, sir, talking about IPOs, in fact, 12 IPOs are to hit the market and 8 will hit the main board, namely your Muthoot Microfinance, Moti Sons Jewelers, Suraj Estate Developers, Credo brand, which owns Mufti line of jeans. Any particular, among these IPOs, any one particular company that you'll probably take exposure in?
So, I have to restrict my comments to the extent where my research team helps me with a recommendation in terms of IPO note. So as of this morning, out of all these names which are going to hit the street, Suyash, Muthoot Microfin Limited is the one as of now on which we have come out with a subscribe recommendation in our IPO note from a long-term point of view. I think rest will follow and I will be able to speak on them as and when we have the IPO note ready. But as of now, out of all these, I think Muthoot Microfin Limited will be qualified as a long-term subscribe investment idea.
All right. And sir, any particular sector where you have, added positions or lightened your positions in this recent surge?
Lightening, nothing to lighten up. Like I said, as and when the need arises, we advise our clients to take some money off the table whenever they approach us with that kind of view. But allocation, I think three sectors that I would possibly, 3 or 4 rather, Suyash, for the benefit of your viewers. First one is banking and finance, both public as well as private banks, strong diversified financial companies. Defense continues to gather momentum, power and railway related stocks. Along with this, my sense is that as the rural economy does the catch up, FMCG and entry-level mid-size two-wheeler manufacturing companies, along with that entry-level four-wheeler manufacturing companies. So these would be some of the themes that we can carry forward into the next year, that is 2024.
And sir, what's your take on the IT pack, which was a big mover last week? Nifty IT surged by over 7%. We saw across the board movement, in both large cap and the mid cap stocks. What's your view there, sir?
So I've been pretty vocal on your channel, Suyash, as far as our IT approach is concerned. And I think now all those fears are put to rest, especially post what the Fed chief had to say in terms of the situation of interest rates. So our sense is still the same. Earlier, before the announcement of Fed statement, and even in last year, if you recollect, Suyash, there was a lot of obituaries that were written for the IT sector. We remained positive. We had strong conviction in terms of turnaround in the earnings for the IT sector, and that has paid off well. We were there when nobody wanted to be there. So we had advised our clients to, and I think on your channel itself, I had mentioned that there are two sectors which are the must in terms of your portfolio allocation. That is banking and finance and IT.
Right.
A small part of your portfolio has to be dedicated towards these two sectors. So we remain constructive as far as fundamental long-term investment idea in terms of IT universe is concerned. And I guess you will see better times in terms of earnings for the IT sector.
And so another thing that you have, said on this channel is that FIIs now they are missing on this, rally in Indian markets, this surge in Indian markets that we are seeing. And to your point, now they are back. They are back with a bang. They have invested close to about 30,000 crores so far in December alone. What particular sectors can benefit from their return?
So, they are, by the virtue of their, guidelines or thumb rule, say, first approach is definitely going towards large cap and then select mid caps. So value, well, that fear of missing out, the FOMO factor will possibly play in much more next year onwards. Our understanding is that IT, financials, autos, metals, cement, defense plays, like I mentioned, three teams, defense, railways and power, would be the spotlight where the FI flow is likely to go. And, possibly if we are able to do well as far as interest rates are concerned, my understanding, and I hope I'm right on that, Suyash, possibly first calendar months, Jan, Feb, March, you might see a small interest rate cut if the data points are supportive and if the inflation number is well within the trajectory of the Monetary Policy Committee as well as the RBI governor. So I think these are the sectors where, you will see more allocation from the FIs, and possibly this is just the beginning of a big flows coming into India. Of course, next year you have a big election, but if the recently concluded state election results are some kind of a tailwind positive, then we know the answer for that.
And sir, interestingly, domestic institutional investors, although they are still buyers, their buying intensity in the last, 2-3 weeks has slightly slowed down. Is it the rebalancing of funds that's going on, or is there anything that we should take note of?
I think rebalancing happens on and off, Suyash, as and when the fund managers feel it is appropriate to do that. But more importantly, to stay at these elevated level as far as the Sensex or the Nifty or, sectorial indices are concerned, it's very important to look at the earnings visibility. So my understanding is that we are not very far away from third quarter earnings this financial year. Maybe, look post the earnings that we see, or as and when the earnings are delivered for this third quarter, this financial year, you might see, the buying activity picking up space. And, we look at fundamentals more strongly rather than the other aspect. So if earnings are going to deliver, definitely your targets on the indices are going to get revised upwards. And so and so forth for the respective companies also in terms of target prices of the stocks. So possibly it's a pause, but I don't think it's a full stop.
All right, words of wisdom from Mr. Gaurang Shah, sir. Always a pleasure speaking to you here on First Take. Thank you. But let's also, before we wrap things up, look at how the markets are doing. And from what I'm made to believe, Nifty has in fact reclaimed the 21,450 mark. and it's just hovering above that. It's flattish as of 10:10 a.m. this morning. Sensex has also reclaimed 71,400 sort of levels, whereas mid-cap index is building onto the morning gains and is now just a touch shy of 45,700 mark. We are essentially there. Nifty small cap index is also closing in on the 15,000 mark, and volatility index India VIX has spiked by almost 6% and it's sitting at 13.9 sort of levels. But with that, it's a wrap on this edition of First Take. Keep watching News 9.
Today, she is the only smiling leader in Rajasthan. All eyes will be on her moves if